Again now.
All right, excellent. So my name is Erin Swenlin from decisionpoint.com, and today I'm going to talk about our analysis process and how it can lead you to picking the right stock. And then once you've picked the right stock, then how you time entries and exits. I'm basically going to kind of run the last half of my presentation like I do my trading room, hence the video, because in my free trading room, I always have my video on. So I'm going to go through this presentation, and then I would love for people to start throwing in some symbol requests into that chat box. Just make sure, I think you need to send it to everyone. So you want to use that drop-down menu that says send to everyone, not just the host and panelists. So I think that will work out pretty well. So if you want to start popping in some symbols now, that's great. And I will hopefully have time to get to most of them by the end of the presentation. All right, so a little about Erin Swenlin. I really came up in this business through the educational side of things. I have a bachelor's in math from the University of Southern California. Fight on for all those Trojans out there. And then I also have a master's in information resource management from the Air Force Institute of Technology. And then I have been studying the markets for well over 22 years. I know I don't look that old, but I am. Then we started decisionpoint.com. I am the vice president and senior technical analyst there. And also you can find me on Stock Charts TV. I'm a consultant for them and have been for over 11 years. And then I am the host of the Decision Point show. And actually, I should have changed this. We stopped doing the Chartwise Women show, but you can find me on the Decision Point show. All of our videos are on YouTube, and you can reach them through the Stock Charts channel on YouTube if you wanted to find those. So I'm going to talk a little bit about the life cycle of a decision point trade. So it starts off for us with a big picture analysis. We want to know what the market is doing in general, because obviously if we're in a bear market environment, our rules of engagement are going to be different than in a bull market. So it's very important to kind of know what those major indexes are doing, in particular the S&P 500, our benchmark. So I always want to know what's going on with that. From there, I do some sector and industry group analysis. I look at our under the hood sector charts. I then go, once I find the sector that I want, I go in and do an analysis of the different industry groups to see where the strength really lies within that sector, because as we all know, you can be in a sector that is underperforming, but an industry group within is doing really well. So I'm usually trying to hone in on a good industry group as well. Then I run my diamond scans, is what I call them. I have a product that I do on decisionpoint.com called Decision Point Diamonds. It's my stock picking newsletter. I pick 10 plus stocks per week for that. And if you like the way the last half of my presentation goes with those symbol requests, that is what I do on Fridays for just the subscribers of Decision Point Diamonds. I call it the diamond mine, because we're mining for diamonds at the end of the week to see what to look for in the following week as far as strength and where we might want to look for our trades. Then, of course, I do those scans. I have to sift all the way through them. It's been rather easy of late just because there aren't a lot of winning stocks out there right now. It's really tough when you get only a few scan results versus in a bull market situation where I could get hundreds of scan results. So it makes it easier, and then I don't have as many to look at. But at the same time, it also makes it hard because finding those winners when you have just a small select group makes it especially difficult. And then once I've sifted my scans, I make my pick, and then I time my entries and exits within, because not only you want to make that pick based on, those big picture rules that I'm talking about, the daily charts, the weekly charts. But once you've made your pick, I use my tool of the 5-minute candlestick chart to time the actual entries and exits. And honestly, with the volatility we're seeing in a lot of stocks, it's really important to make that timing. Make sure that you're getting in at the best point during the day, or when you've decided you don't want a stock, getting out at the best point in the day. If you don't have time to look at those 5-minute charts, I'm in the process of actually putting together a alert scan that you could use on stockcharts.com. Don't have it yet, but it is in the works, and my Diamond subscribers will have access to it as soon as I have it ready. So once I've timed my entry and exit, I want to determine a target and stop. You can make it mental target, mental stops, but really in the environment we're currently trading within, in this bear market environment, I recommend hard stops, not just, well, I think I'm going to look at it when it gets to this level. No, when you're in a bear market environment, you need to consider every single investment that you have on the table as short term. You can't be looking at just, buy and holds right now. Your buy and holds should be getting just as much attention as the rest of your portfolio right now, because we are in this bear market environment. So that's kind of the life cycle. So which charts should you follow? And I often do this because everybody asks me, well, what is long-term? What does short-term mean? So this is kind of my guidelines. I think everybody has their own, feel for what it is, but long-term investing, you look at those monthly charts and those weekly charts, and then you move down to your daily chart. And then of course you move to that 5-minute chart to time your entries and exits. But that's pretty much your long-term time frame. You're looking at, 6 months, maybe a year, as far as a long-term investment. Intermediate term investing, you're going to look at those weekly charts to the daily charts, or you can always look at a daily and then say, well, what's the weekly chart doing? But typically, you always want to start big picture, move down. Weekly charts to daily charts will be intermediate term, and then short-term trading, which I'm kind of concentrating more on today, is going to be those daily charts to minute charts as far as what you're looking at. The daily charts, you can move to a 30-minute or a 15-minute, if you will, but I tend to just do those daily charts and then move right on into my 5-minute candlestick. Day traders, you can use the minute charts, and I think that my timing for entries and exits on a 5-minute chart is really helpful to time entries and exits just for short-term, intermediate-term traders. But I think it would be especially helpful for those who day trade. I do not day trade. It's just not my thing. And then, as I said, all of these lead to timing your entries and exits with those minute charts. So what are the important indicators? The primary indicators I use on my daily and on my 5-minute, number one is the decision point price momentum oscillator. It's ours exclusively. You can find it on stock charts. I believe TradeStation has it. Optima has a tool. I think it's in that one, but it's not in every platform. So it is rather exclusive, and it is our indicator that we came up with. It's very similar to a MACD and a PPO. If you put them side by side, they look very similar, but we like the way that the PMO works, and we do use a little bit of a different parameters for our PMO as well. It's a little bit slower than what the MACD uses. I have to have that relative strength index. That's going to be key on your 5-minute entries. I use on balance volume. You're going to find that on both of my charts. I like to kind of have a feel for what's going on with volume. I've loved the OBV since I was calculating it as a high schooler from my dad with a calculator, a ruler, and a pencil. So I was doing on balance volume all those years ago. And so it's just one of those things. I see it, I know it. I don't necessarily say it's the very best one, but for what I do, it is the best one. I also use stochastics, but I do that on my daily charts. and then relative strength analysis. And that is on my daily charts as well. We were talking about finding industry groups and sectors with the most strength. I think having this relative strength analysis on your chart is extremely, extremely useful. So let's just take a quick look at all these indicators on my daily chart. So you can see up top, that's where I have the RSI price, of course, and I'm using candlesticks. I do study the candlestick, rules of engagement, if you will, but on a pretty light level. But I still think that it's very helpful to see that. Obviously, you can see that this is not a today's chart. I just wanted to make sure that you knew that. I use the price momentum oscillator. As I said, you can see where the momentum is going on a stock, and these crossovers are especially helpful, but not always necessary. Then here's my OBV. You can see it confirming the downtrend that we have here. And then I have stochastics. The key with stochastics, and something I had to get used to as far as stochastics, because usually when you see overbought conditions, like on the RSI, when it's above 70, when stochastics get above 80, that's technically overbought. But with stochastics, you'll see you want them to be above 80 and oscillating, because typically in that area, you're going to get a rising trend. So I'm always looking for stochastics to get above 80, get close to 80, and then start oscillating. But if they turn down, like you can see over here, that's usually a sign that in the very short term, you're going to see a bit of a decline. Then is that relative strength that I was talking about. I start off by taking the relative strength of an industry group, whatever the stock is in, and I compare that to the SPY. And the reason I do that is I want to see outperformance. Obviously, I want to see that relative strength line moving up, like you can see here. So in this case, pharmaceuticals, when I did this particular chart, was really starting to show some great relative strength as a group. Then I want to see what the relative strength of that stock is to the S&P as well. How is it performing against the S&P? And in this case, we were seeing some really nice relative strength building in that last week. And then I like to take the relative strength of the stock to the industry group. This is the one that not everybody does. And the reason I do this is I want to find a stock within that industry group, hopefully an outperforming industry group. I want to find the outperformance of the stock against its group, because then that tells me I'm probably finding some of the cream of the crop within that industry group, if I'm finding one that is starting to outperform its industry group. Entries and exits. So it's the same indicators, like I said. It is the same thresholds pretty much. You want PMO rising, PMO crossover, positive RSI, et cetera. And then you use the minute charts for entries and exits only. Like I said, you can certainly, especially if you're a day trader, use minute charts that are, 15, 30 minute, 1 hour. But typically for me, I'm going to use the daily chart for the majority of the analysis. And then I go to my 5-minute candle just for entries and exits. So entries on a 5-minute candlestick and exits on a 5-minute candlestick. All right, so rules for entries and exits. And again, I'm going to show this to you live with your stock picks and go from there. But rules for entry and exits. So when you're looking at that 5-minute candlestick, your entry is determined, a conservative entry is what I call it, is determined by a PMO positive crossover combined with a positive RSI, meaning the RSI is above 50. That's kind of our net neutral line. So if it's below 50, it's a negative RSI. If it's above 50, it's a positive RSI. So that's what you're looking for on your 5-minute candle. The sell points are super, super, super easy anytime the PMO turns down. So as soon as you see any negative momentum going on for the day, you're ready to leave a stock, you get out. So if there's negative momentum, more than likely, price is going to continue lower from there. So you want to time that exit right when the momentum starts to shift downward. Then there are aggressive entries, and really you'll see me talk about that in the trading room. You'll see me talking about that at the end of this presentation when we do those, when we do what we need as far as looking for, price. You want to see what's going on with, you want to see what's going on with the PMO and RSI. Has the RSI been positive all day? Maybe if the RSI has been positive all day, you would just enter on a PMO moving up and not wait for the crossover. Similarly, you can do it backwards. So it's not that you have to enter on a PMO crossover and a positive RSI. That's sort of your starting point, your conservative buy point. I typically will wait for the PMO crossover simply because you can get a lot of fake outs during the day, where price will bounce and the PMO will turn up, but then it's a false breakout, price starts to turn down, and then the PMO turns down. So it's better, your chances of a better entry are going to probably be on that crossover, but you may miss some of the rise earlier on if you go with a conservative entry. So it's kind of your call. So let's look at a 5-minute candlestick so I can explain these rules with a picture in front of us. So first thing you want to enter on is the PMO crossover buy signal combined with the positive RSI. So you can see that we got that signal of the crossover just as that RSI became positive. So that's where you would have entered earlier in the day. Now, if you're exiting, you're waiting, like I said, just for any PMO turning down. You don't have to wait for the crossover, because in this case, if you had waited for the crossover, you would have lost quite a bit here on that decline. So that's a way for you to get out on the turn. Now, obviously, looking at this chart, you could have gotten out at a little bit of a different time and probably, had a little bit of a better exit. But in general, that's, not what you're looking for. You just need momentum to turn down. I'm usually not that picky when it's time to sell a stock. So that's why I just use the PMO turning for my exits. But there's going to be times that are a little bit different, like I said. So in this case, you had a positive RSI pretty much all day. And so when the PMO started to tick upward like this, you could have made a more aggressive entry, and that would have put you in down here. But by waiting for that conservative entry, because here's your crossover buy on the PMO, positive RSI, that would have gotten you in here. So you miss out on a little bit of the move upward. But like I said, you're safe from those false breakouts. So that's something to consider. So I know that was really short, but that's what I wanted to show you as far as how this works. And let's start looking at some symbol requests. So I'm going to go ahead and move my screen to my trading room setup. In fact, I'll show you how I set it up, and then we can get on with that. I did want to tell you that I just finished recording something really fun. StockCharts.com did the stock charts draft. For any of you who do fantasy football, baseball, or whatever, it's kind of a play on that. There were 8 of us. We had to each pick 2 stocks from the S&P 100, and we're going to see how they do after the next 6 months. So I will be having that information in my free newsletter. Go ahead and just go to decisionpoint.com. You'll see the spot to sign up for the free newsletter, and you'll get all those updates on how my team, Victoria's Secret, is going to do in the stock charts draft. So if we don't get enough symbol requests, I will certainly look at a few of the ones that were on my short list from the S&P 100. So let me get over here. So I'm going to put a daily chart on the left. Halliburton was one that got picked in the draft, not by me. And then what I'm going to do over here is have my 5-minute chart. So what we'll do is when I get the symbol, I put it over here on the daily chart. We do our analysis on whether we want to have it. And then we go to the 5-minute chart. and see when our entry or exit would have been, where it would have been, or where it's getting ready to be, and go from there. So just as an example with Halliburton, we have certainly a winner that is keeps on winning. We have a very flat PMO. And what that tells you is not that things are negative, but the fact that our rising trend is so steady that there is no loss of momentum. But at the same time, we're not getting an increase in momentum. It's all pretty much that same rising trend. And so you can see right here where the Halliburton just started to rise, but the PMO was pretty much flat. A lot of signal changes in here. But right now we have a PMO buy signal on this and a positive RSI on Halliburton. Stochastics are above 80. And then look at the relative strength. This group has obviously been doing well as an industry group, and Halliburton has been doing well against the S&P. And then notice also that it has been outperforming its industry group. So we know that within the oil equipment and services that this should have a nice lead. It has a leadership role. And so this might be one we're interested in. So we come over here to the 5-minute candlestick chart. And again, we're looking for those exits. Here's your exit. That would have gotten you out right here, which obviously was a pretty good exit for the day. And now we've come all the way back down with price, and we're seeing the PMO starting back up, and we got the crossover. But notice the RSI was not positive yet. And so that ended up failing on that rally and turned back down. So we never would have had the entry here. But the PMO then it goes on a buy signal. And I'm just going to move it over. Right here is when the RSI goes positive. So you have the crossover buy. You have the positive RSI. So this would have been your last entry. And you're coming to the chart. The entry has passed. What do you do? Well, you can see kind of what price that entry was at, which would have been $41.41. Obviously, we're much higher than that. So you need to kind of look at what's going on with price and kind of determine whether should I just enter now, because I don't want to miss out on all of this gain, which is almost 2%. So you have to make that decision, right? So I would be looking, let's go ahead and I want to update this to make sure what I'm seeing is true. So we had this bearish engulfing candlestick, which told me that maybe I wouldn't want to enter just yet because this might be that opportunity for a little bit of a pullback and then get a better entry. So we are pulling back. And I would say the next level of support is going to be right around here at 41.50. Like I said, our entry would have been more down here, which could also form support on that low. But I would like to see it here, and then I would like to see it bounce a little bit. We could see that PMO turn over, but there's a lot of margin between it and its signal line. So really now it's just going to be a matter of watching that price action, seeing if that RSI will stay positive, because what's going on is probably something like this, a little bit of a pullback, not a lot of damage to the PMO, not a lot of damage to the RSI. And that's what I'm looking at here as far as the 5 minutes. So I would say the entry kind of has passed, but it's going to offer a better entry soon just based on the fact that the 5 minute is showing things moving lower like that. All right, I need to get my clock back up here so I make sure I don't go over my time. But this leaves us with plenty of time to start looking at some of your symbol requests. So hopefully we have enough in there and out there. So, oh yes, we have lots to look at. Excellent. So I will go ahead and see how many of these I can get through, and then give you kind of the way that this will work. And again, if you like the way this is set up and what I'm doing here, I do a free Monday trading room at noon Eastern time. So you can spend your lunch with me and we can do exactly what we're doing now. The only difference is instead of a presentation at the front like I did today, I will do that life cycle of the decision point trade. We'll start with the big picture, what's going on in the indexes, what's going on in the sectors, which sectors look, pretty enticing. And then I'll start to go through the actual symbol requests. So in the Friday trading room, that is for just subscribers, that one is an hour and a half instead of 1 hour. And again, it's subscriber only, Fridays at noon. And we look at all the picks that I made that week and compare them and see how they're doing against the S&P. Then we go through each of those. Then I do a very in-depth sector analysis and a very in-depth industry group review. And then we go in and pick stocks within that area that's looking good. And so I can give my subscribers kind of a compass moving into the following week. They'll have a sector to watch, they'll have an industry group to watch, and they'll also have a handful of stocks that they can watch and determine if they want to go to a 5-minute candlestick and jump on in. So looks like my first request in here is Etsy. So let's go ahead and do that. Okay, there's my daily. So, well, Etsy is obviously having a fantastic day. But we're going to get a way better buy point. I'll get there later. So first of all, one of the things to consider, especially right now when we're in a bear market environment, whether you believe it's a bear market or not, I do, my father does, a lot of my colleagues do, but it hasn't had the official, at least the S&P 500, hasn't had the official 20% decline. I think we got to 18 or 19%. So yeah, if you're going by textbook rules, okay, not a bear market, but technology is in a bear market. NASDAQ is in a bear market. The NASDAQ 100 is in a bear market. So, you know, you have to keep that in mind. So this one is in a bear market. It's dropped, I'm sure, more than 20% here, more than 50, it looks like. In fact, I can measure that. So from here to its low was a 64% decline, 65%. So yes, this one's in a bear market. So I have to follow those bear market rules. So number one, if I see a positive chart pattern, I should be a little skeptical as to whether it's going to break out. If I'm looking at this chart and I see good things going on, I still need to be very skeptical because it's in a bear market. And so when you get overbought, oversold conditions, you know, those are great in a bull market, but they just don't always pan out. So you really need to make sure that the rest of the components on your chart are very strong. Etsy's having a great move today. It's bouncing off of this level of support. And I suspect if I put this on a weekly chart, let's see how strong this support level is. I mean, it doesn't line up that well with any lows or highs over here. I mean, I suppose you could go, I don't know, maybe here as a support level at about $99, $98. That could be, but really when I look at this weekly chart, this is the strongest area of support. That's a lot further down. That's another 35, 36%. So I would be very careful with this one. It does look like it's reversing here on the daily chart off of some really great support, but really the support is only at this candlestick. So something to keep in mind there. Number two, we have a negative RSI, so that bothers me. The PMO, it looks like it may be rising now. Let's go ahead. I'm just going to add this zoom thumbnail on here. Kind of gives me a little magnifying glass as to what's going on. So the PMO has stopped its decline, but it is flat. I do see a bullish engulfing candlestick on its way though today. So that's a big positive moving forward. Stochastics are obviously rising, and, you know, relative strength though is kind of ho-hum. You know, the group is doing, forgive me, I have dogs here. The group is doing, you know, in line with the S&P. Sorry about that. I was yelling at him. I didn't think you'd want to hear that. So this one is doing, the group is in line with the SPY. Etsy is pretty much in line with the SPY. It's pretty much flat and it's performing about as well as its industry group. Now, in a bull market, this would be fine to me, but we're in a bear market environment. So performing as well as the S&P right now, it doesn't impress me much. So I would be a little bit concerned right now with Etsy. I do see some nice things under the surface. As I said, stochastics have turned up, PMO is flat, so it could be on the way to turn up, but I would just be very wary, and I would set my stop very thin if possible. Gosh, it's really not even possible, because there's that other support level. Now we're talking a 10% stop. I'm not thrilled with that. Right here, maybe if we line it up there, we get ourselves a 7.4% stop. That would be a little bit more my style, but I usually look for support resistance to set my stops. So in that case, I would be setting it right at that low right there. All right, so I'm not really thrilled with Etsy here, but let's just go and look at whether if we wanted to buy it, kind of what our entries and exits were. So, you can take it or leave it as far as my analysis to whether you want it or not. I'm assuming that you request it because you probably want it. Well, if you do, this is certainly not the time to enter. Notice that the last entry was back here, where the PMO gave us that crossover buy and the RSI was positive. So this would have been your entry pretty much on the open today. And that's kind of tough, especially for me on the Pacific time, because I'm not up when the market opens. It works out well for me anyway, because I like to have a lot of data on my charts. So that works out. But so we know our last buy point was at 109.60. The sell point came along, well, it kind of was toppy over here. RSI was overbought. So I could see a sell point would have been right about here. But we're talking buy points now. So when can we get back in? Well, the RSI is negative, but it's rising. The PMO has been falling on a sell signal, but it is starting to flatten out. But given what I'm seeing on the daily chart, I would want to wait for that crossover on the PMO, or at a minimum, a positive RSI. This is a really toppy look. Certainly, this could be an area of support here for it to be making that reversal. But I would just be very careful on my entry here. You might give up a little bit of rally if that's what turns out to happen here, but this looks awfully toppy. I suspect we're going to get a little bit of a false rally here, and it's going to fall back down. All right, BCE, let's look at that. This is way more fun to me than talking to a PowerPoint. So I love doing my trading rooms. We have a lot of fun in there. It's a webinar, so there's the Q&A box for your symbol requests, but then I have the chat room for all of you. And so people will get in there, send some chats, start talking about stocks they're looking at, their feelings about stuff. Sure, it's going on while I'm talking. I don't really care. I think it's very important to have a strong community. And I think that is really what we're seeing happening in our trading rooms, particularly that Diamond Mine on Fridays for the subscribers. We have a really tight-knit group there. It's a lot of fun. All right, back to BCE. It's in comm services, which bothers me right off the bat. But looking at relative strength, it's certainly been a pretty good relative performer, even though it's in kind of a depressed industry group. And look at this stock against the S&P, doing really, really well. It's performing pretty much in line with its industry group. I find that what it's doing against the SPY is more important than what it's doing against the industry group. So this one's performing pretty much in line with the industry group. And I'll accept that because the SPY is, it's doing really well against the SPY. But here are things I don't like. So this one is in a bull market instead of a bear market. So that changes things a little bit. But there are a couple things I don't like right now. I don't like overbought RSIs. Typically, you can see back here, overbought RSI right before a decline. Over here, overbought RSI right before a decline. So it's been overbought for a while, which does tell you there's a lot of internal strength, that it can continue to make those highs and stay in the very top of its 2-week trading range. That's what the RSI basically is telling you. So that's a little bit worrisome, and it has turned down. And the PMO has topped in overbought territory. So that's a little bit of a concern to me right now. I would say if you own this one, I don't see any reason why you would get rid of it. Getting in, I think this one could be interesting if we can get that PMO to turn back up, because what I'm seeing is a flagpole with a flag on it. And there is a high likelihood we'll get that upside breakout like the chart pattern would suggest, because we do have a bull market here for this particular stock. So I can look at it and think of chart patterns working out the way they're supposed to. The stochastics look pretty great. OBV is confirming this price rise. So I'm thinking that we'll probably see a continuation here. But like I said, I really would want my PMO to be turned up. As I tell most of my, as I say in the trading rooms often, you will not find me buying a stock where the PMO is turned down. I absolutely will not buy a stock if the PMO is turned down, because maybe it's not going to make a big decline. We're kind of looking toppy here and we've just been consolidating. But the fact that it's showing negative momentum in any way, my chances, my risk is a lot higher because the momentum is turned negative. So I would not want to get in just because the PMO is turning over right now. But I think that's just a function of this consolidation, and it's going to work out because it's going to bring the RSI lower. But I would want to wait and see what that PMO is going to do on that daily chart before I would jump in. Now, if you are ready to jump in now, which, I wouldn't blame you, it's not terrible. We are looking at the last buy point. So here's the crossover. So that would have been an aggressive buy point because we don't have a positive RSI. So we need to wait for that positive RSI, and we're going across the PMO RSI. Kind of gets positive there, but I had to probably waited till about here, and that would have got me in here. You can also see we saw a breakout right after that. So that would have been my entry. Of course, I've been yakking all this time, so let's see what would have happened there. So it did from this bar ended up, let's see, so we would have entered right about there. So that would have gotten us in right in this space. Let's just say 57.81. And it's still a bit higher than that, but it is kind of pulling back. It's not damaging the PMO. The RSI just turned up above net neutral 50. I think this is going to be a pretty good buy point. All right, next up. Oh, Marathon, yes. I believe this was on my diamonds pick list last week on Tuesday, so a week ago. I put this, brought this to the table as a diamond in the rough, is what I call them. We don't know if they're going to shine up and sparkle, but they look like they could be diamonds. So that's kind of how I look at my DP diamonds. All right, so we're going to put Marathon over here. All right. For the record, I do like this area of the market. I talked about my stock charts draft this morning that we did, and one of my picks was ExxonMobil out of the S&P 100. I think Oxy looks a little bit better than Exxon, but Oxy isn't in the S&P 100, although the commissioner let two of the people cheat and one of them took Oxy. So I'm like, well, I get stuck with XOM and you get Oxy. But I think that they're both going to do well. I don't see any reason that oil prices are going to move lower at this point. I just don't see it. Maybe we'll have some consolidation, but I really don't see oil falling too much. So I think energy stocks are still going to be the place to be. I don't see them doing, falling in a major way. Like I said, maybe consolidation. So I like Marathon just for the fact that I know I like that sector and I know I like this industry group. So what's going on in the chart? Positive RSI. PMO is just about to give us a crossover buy signal. The PMO has been flat, but again, that's okay. That means we've had a really steady rising trend. So I'm fine with that. Stochastics are above 80. They have turned down just a little bit, but that doesn't bother me. What I'm looking for is for them to stay above 80. So they've gotten above 80. So I think that that's showing us some internal strength. Obviously, the group's doing well. Obviously, it's doing well against the SPY. And Marathon is performing pretty much in line with its group. And given that the group is doing well and outperforming, of course, Marathon is too. So I would say relative strength wise, it looks good. So I would say this is a possible diamond in the rough. I think that there's a lot of good going on this chart. So let's look at our entries and exits. The last entry was right here. There's your PMO crossover, positive RSI. So that would have gotten you in on this candlestick somewhere. And so I think that would have been at this point a pretty decent entry. Clearly, we've gotten some price movement moving higher. Not really thrilled to see it get to yesterday's close and start turning down. And I don't really like seeing this PMO turning down because that means this was a sell point. Well, I'm getting ready to come in, right? We like the daily chart and I'm ready to buy. I wouldn't be a buyer here. The PMO is turned down. And again, I don't buy things when the PMO is turned down. I just am not going to do it. It's a silly risk to take, in my opinion. So yeah, you might grab some rally on a reversal, but you really have to count on that reversal. So the PMO is turning over. So while it's still on a buy, because the PMO is on a buy signal, the RSI has been remaining positive. If I came to this chart right now, I'd say, I need to wait and see what happens because I know I can get a better buy point. Let's go ahead and just update it. And yes, so the PMO is still kind of turning down here. RSI is positive. So that tells me that really as soon as the PMO turns up, it's probably going to be a good buy point. All right. Hopefully that was helpful. All right. There's a bunch of symbols in here from Balwant. So I'm only going to cover one at this point so I can get to other people's. Let's see. I'm just looking at what they are and see what let's look at GDX because I actually have a chart with my under the hood indicators, as I call it. Basically, I have a chart that's going to show us participation under the surface. So I'm going to actually kind of close this out. And this chart that I'm going to show you is a chart that I go and look at every market day in the decision point alert. This is our decision point alert chart list. This chart list with annotations are available to our subscribers on our website. You do not have to be a Stock Charts member to access them and see them. But you can see I go over the S&P in great detail. I have quite a few different indicators. I don't write about every one of these charts every day. I pick the interesting ones, and we do have some that we always look at. But also I look at Bitcoin, I look at the dollar, I look at gold, I talk about gold miners, I look at oil, and I look at bonds, and I cover the 10-year treasury. And that's every day in the DP alert. So you get all the information you need for that first part of the life cycle of a DP trade. It gives you all you need to know about current market conditions. Really high level type of report, meaning it's really great for the executive or the person who doesn't have time to sit in front of the computer all the time and follow the market. Every chart has a very short description on it, and you can read through it very quickly. And in a pinch, you could just go all the way down to the conclusion and just read the conclusion and still get really the beef of what's going on. So back to gold miners, where it is right there. So again, this is a chart I look at every day in the decision point alert. So I've been a real fan of gold miners. I see a big pullback today, but I think it's very constructive. It's really been running quite a bit. And I know gold has been seeing a little bit of a rough, it's starting to see kind of a rough week. In fact, let's go ahead and just look at gold. Yeah, so, gold has been rising, and so has the gold miners, but we're now starting to see a little bit of failure at support on gold. It's starting to look like it wants to test its rising trend. So that is going to put a little bit of pressure on GDX and the gold miners. They don't travel exactly with gold, but they are affected by gold. And the reason they're not completely tied to gold is what I tell people is that, they're a company. They have other things to think about besides the price of gold. They're also exposed to what's going on in the market in general. So that the winds are going to be a little different for gold miners than it is for just gold. But we are seeing that pullback. I think it's constructive. The PMO had just given me a buy signal, and it looks like today it's going to give me a whipsaw sell signal, but I'm not worried. RSI is still positive. I wouldn't buy GDX today just because the PMO is turned down, but I have high hopes for gold miners. I think that they are going to rebound, if not here off that 20 in this support level here, which matches that top back there. And these two short-term tops, that's a strong area of support. If we lose it, then I might have to rethink a little bit on miners, but they still have a rising trend. This 50 days still, not that far. I still like miners. Why do I still like miners? Because when I look under the hood, participation amongst them is outstanding. So I didn't talk much about our silver cross and our golden cross, but I'll talk to you about that. First, I'm going to talk about the percent of stocks above their 20, 50, and 200-day EMAs. 100% have their price above the 50-day EMA. 93% have price above their 20. So that means we know they both have price above their 20 and 50, but that's where the silver cross comes in. The silver cross measures how many stocks have a 20 above the 50. So we know how many stocks are above those, but it's really helpful to know how many actually have that bullish configuration in the intermediate term. And in this case, 100% have a 20 above their 50. I mean, how can you beat that kind of participation? We have 93% above their 200-day EMA. So we know with a 50 and 200-day EMA, upside crossovers of a 50 and 200 is considered a golden cross. The silver cross is based on 20 and 50-day EMAs. So that's why it's a silver cross. So we want to measure here with the golden cross index, how many have a 50 above their 200. That is 87%. But we know there's a higher percentage with price above both their 50 and 200. That tells me that this number can only get better. It could certainly get worse, but it's really set up with the participation being that strong that we should be okay here. But it does look like we're in for a bit of a pullback. You can see stochastics have fallen and they're back in below 80. So there is some weakness going on here, but I would expect that when you have an almost 3% decline. But again, participation looks good. So I still like gold miners. But given that PMO is turned down, I don't know that I would be a buyer right now. But we'll look at our 5-minute really quickly on GDX. And you can see big decline started early in the morning. It's just now consolidating that decline, and it's holding support here at about 39.60. The buy point today really never came in. I mean, the RSI was positive for a brief moment, but I don't see really a point in time to really buy this. So today, just because that RSI is staying negative. However, if you are a bigger risk taker and you do see that PMO start up and you start seeing a breakout maybe above this kind of this declining trend here or above this 39.90 level, there are a few things that would make me consider buying GDX today, but I'm not really thrilled with this setup on the 5-minute, so I would need a little bit more confirmation. All right. Michael, how about, let's see. Let's look at Duke Energy. So utilities have been kind of hit and miss. That was one thing that nobody picked out of the S&P 100 for their draft, no utilities. A lot of that just has to do with a lot of times you don't see these kinds of rallies generally in utilities, but obviously looking pretty good right now. I'm going to look under the surface here a little bit. This group is performing pretty much in line with the S&P, and so are the gold miners. So again, we're talking, wait a minute, let me get myself. I don't want that. I need my default. Like, why is all that other stuff in there? All right. So kind of a flaggish look, but it's more rounded top. So I'm not really thrilled with the look there. But RSI is positive. It's moved out of overbought territory on this consolidation. But unfortunately, it has turned that PMO lower. And the PMO is in overbought territory. So I would be a little bit leery of getting into this one, again, just because we have an overbought PMO that's turned over and kind of a rounded top on price. We can see stochastics are still positive above that 50 level, but they've just left the territory above 80. When we look at relative strength, the group's still doing pretty well. It looks like it's starting to falter a little bit here this last week. And Duke has been doing very well against the S&P, although it's starting to falter a little bit as well. You have, as far as how it stacks up in its industry group, performing pretty much in line with its group, which is just great because obviously we're seeing that relative strength, and you can see the relative strength line for Duke against the SPY is almost the same. So I'm not really a fan of this one right now, just because of that rounded top and PMO topping in overbought territory. So I wouldn't really be a buyer here, but let's say I was, or if I were a seller. First of all, lots of buy points here. It looks like kind of coming in here as the RSI moved positive. We got crossovers. This looks like a much better setup, though, on this last buy signal. We have the crossover and the positive RSI that would have gotten us in, well, probably right on that candlestick there at about 114.06. Kind of past that, obviously, but we're now in positive territory, so that's great. If I came to this chart and I was a buyer, I would consider this a buy point. PMO's on a crossover, RSI is staying positive, and it looks like we're going to get a little bit of a breakout here above that little short-term top. So I think that would look good. So if this looks good to you, the buy point is coming in now. I do have to give you my caveat. I am not a registered investment advisor. So all of your trading decisions are your own. And even though I talk buy points and sell points, I'm not giving you a call to action. I'm not saying, oh, you should go out and buy this. I'm just telling you based on the technicals, that's when you would want to buy. All right, looks like I have room for maybe another one. Yeah, dogs don't like stochastics, apparently. Yeah. Do I only go long? What about bearish options trades? I'm going to stop sharing my screen because I'm getting low on time. So I want to talk to you about some of these questions. Do you only go long? I do. I don't do options, period. But I still think that the analysis and particularly that 5-minute bar chart can be very helpful, even in trading options. But I don't study that really. My products aren't geared toward that. It's geared toward stocks, mostly going long on the buy side. I did have a few shorts that I pull up when the market's just in, a free fall. But I don't do the shorts that often, mainly because when I think about it, it's, the upside is somewhat limitless. Whereas if you're picking a short, your downside, your profit is limited. It's only going to go down so far. I mean, even if it goes to zero, that's as far down as it can go. So I do tend to do that. Let's see. Short, I assume, do not short against positive PMO. Yes, that would be my advice. If you have any kind of positive momentum coming up on a chart, it's a high likelihood prices are going to be moving higher with the PMO. When it tops and starts to look negative, more than likely you're going to see prices move down. And so certainly wouldn't want to be there. Do you only stay on 5-minute charts, or would you look then at others? Michael, I will look at a 15 or 30-minute chart, particularly on those low volume type stocks where, the 5-minute chart kind of has a lot of, fits and starts. You don't get trading for 5 minutes, 10 minutes. Then you kind of need to move to that 15-minute or 30-minute bar chart. If you made a comparison between the 5, 15, and 30, in fact, I'll just do it really quick here. I think I have just a few minutes. So let's just do this. Okay, now I'm trying to remember what I was getting ready to talk about. I've already lost it. 5-minute, 30, 15, and 30-minute. Okay, so if we look at this chart for Duke Energy, we know that about 2 o'clock-ish, we got a buy point. So let's see what it looks like on a 15-minute. So 2 o'clock-ish, the buy point actually came in just a little bit earlier, it looks like. No, it didn't, because there you go, negative RSI. So we would have had to wait. Then it goes positive, and that's right around 2 o'clock. So that didn't really change your buy point. 30-minute chart, it's taking a little longer. We're just now getting that crossover buy. The RSI isn't quite positive, but still you can see that we're on the buy side here, even just like we were on the 5 and 15-minute charts. All right. Before I leave, because it looks like we are definitely out of time, I am going to move back to this. I do want to remind you, if you are interested in trying out my free trading room, it's Mondays, noon Eastern. Just go to my website and you will see my face, I believe. You'll see the Decision Point Trading Room logo, and there's a little register now button. You can just click on that and register for this free trading room. Zoom will give you a 1-hour notice before it starts, and it's recurring. So you don't have to sign up every week. You'll always get that notification. If you can't go, you will be on my free newsletter as a participant in the trading room. And so you will get those recordings Monday night. So even if you can't attend, you still might want to at least sign up for my free newsletter so that on Monday nights, you can look at the trading room recording. And of course, if I'm here at a presentation, I have to give everybody a good deal to try me out. So I need to show you my prices because I haven't done that, but you will get to save. If you use the coupon code SAVE50, you will get 50% off of your first month. But let's go here, and I'm going to show you on the website how much of a bargain. If I can get my, let's try here and DP. So there's our home. This is where you can sign up for the free newsletter. And this is where you can register for my free trading room. But the cost of my subscriptions are quite low. So if you are interested, again, my price points couldn't be better. And this is professional grade analysis. It truly is. The DP Alert, which is that one that does kind of the general market analysis, gold miners, gold, Bitcoin, that's $35 a month. DP Diamonds is that stock picking newsletter. It's the one that includes the free trading room, or I'm sorry, the paid Diamond Mine trading room on Friday. So that's that exclusive trading room is only available to Diamond subscribers. But if you want to try both of them, instead of $75 per month, it's only $68 per month. And like I said, if you go to the website and subscribe and use this coupon code, you'll get 50% off your first month. So certainly worth a try. See what you think of my products. I think for $34 this month, I think you'll probably make a little bit of money off of some of these diamond picks. I have subscribers that are probably even here that they love my products. I have